Hey there, everyone. It's Tuesday, December 12th, 2023. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market action using the best practices of technical analysis. Earlier today, I did a webcast for market misbehavior where we talked about 10 questions investors should ask at the end of every year. A lot of talking about reviewing performance, reflecting on wins and losses, but a great sort of wake-up call to think about what happened through the course of 2023 and the lessons that you can learn from just reviewing the charts. One of my former analysts at Fidelity in my years there used to say, charts are the report card for your portfolio, right? They tell you very quickly whether you're on the right side or the wrong side of things. So besides just following the trends, following the charts, and respecting the evidence of the market, don't underplay the value at year end or at quarter end or weekend or whatever it is to use charts as a way of looking back and seeing what happened and really thinking about where you are on the right side of things, where you might have some opportunities for improvement, where your process, your decision-making approach could have some tweaks. Now today, of course, we're sort of in that treading water kind of day leading into tomorrow's Fed meeting. We had the CPI number for November coming out earlier today. Not much of a change, but sort of continued upside for stocks, continuing yesterday's rally. I think a lot of investors waiting to hear what we learn tomorrow from Powell and Cruz. So for now, let's look at what happened today, see how we're setting up for this Fed announcement on a Wednesday, and let's get right to our market recap. S&P 500 up about 0.5% today as we look at the major averages. The S&P 500 just below 46.44. That's up about 0.5% from Monday's close. The NASDAQ Composite up 0.7%. The NASDAQ 100 up a little bit more, about 0.8%. Mid caps and small caps actually both in the red. They were a little more so, but through the course of the day, the red got a little less dark, I guess, down about 0.2% for each of those. The VIX spent a little bit of the afternoon at an 11 handle. Actually got below 12 for the first time, boy, in a number of years. We'll have to go to the chart and see the last time, but I would bet that's probably, 4 or 5 years ago. We'll have to look and see when we've gotten down below 12 before, but it's been a little while for sure. Continuing on with other asset classes, let's look at the bond markets, mostly red here looking at the yield curve. You can see the 5, 10, 30-year points all moving slightly lower. The 10-year yield getting very close to 4.2%, 30-year yield just above 4.3%, the 5-year yield again around 4.23. So we're seeing the bond rally sort of continuing here. We're seeing continued upside for bond prices. We're seeing interest rates pull back a bit. I mean, arguably one of the great stories of 2023, or certainly one of the charts that, as I'm putting together some of the key charts to tell the story of this year, interest rates certainly a big part, if not at the top of the list. And that 10-year yield, thinking about the rise in rates, the pullback in rates that has happened in the fourth quarter that has really allowed growth stocks and our growth-oriented benchmarks to thrive, a key part of, I think, the navigating 2023 for investors. The dollar index down slightly, about 1/3% from yesterday's close. Looking at commodities, you're going to notice that the energy part of the space down in a big way. Now, this is not a new trend. This is, again, I think a lot of the patterns you'll see today are sort of continuing some of the trends that we've observed here in November and December. Crude oil prices coming down after having such a strong run in the third quarter, certainly a big part of the story as well. Crude oil prices continue to push to the downside. Energy stocks continuing to underperform. The energy sector, probably the worst performing sector, I think. Yep, there it is at the bottom of the list in a familiar place. Crude oil prices down almost 4%. That's using the USO. Natural gas prices using the UNG down almost 6.5% today. Gold, silver actually just slightly below the zero line. Looking at cryptocurrencies, sort of flat from recent days. Bitcoin, of course, has drawn down quite a bit from touching sort of that 45, 46, 47,000 level in the last week. Now pulling back quite a bit. Still about 41,000, currently around 41,300. That's up just slightly from yesterday. Ether prices down about 1.6% from yesterday. So overall, I would say the long-term trend still positive. One of our frequent guests, Adrian Zadunchik, posted a chart earlier today just with the 200-day moving average of Bitcoin, which I think is a brilliant way of just showing the simplicity of the uptrend. 2023 has been a pretty solid year. Now, there's been a lot of volatility, and I think just looking at the 200-day minimizes the reality of those big swings. That is the reality of owning something like Bitcoin or GBTC through the course of the year. But remember, the longer-term trend has still been quite positive. So even with the drawdown that we've seen, that comes after a pretty big rally. And overall, arguably, those charts are still pretty constructive over that medium-term, long-term time frame. Finally, looking at the 11 S&P sectors, financials at the top of the list, up 0.7%, followed slightly behind by technology, about the same to the upside. Materials ended up number 3, up about 0.6%. At the bottom of the list, you have energy, and again, there have been a lot of days where energy sort of had that place of distinction at the bottom of the 11 sectors, down about 1.4% from yesterday's close. After that, it's utilities and real estate, arguably two of the more defensive sectors, followed by consumer staples right after that. Real estate and utilities rounding out the 3 sectors in the red at the end of the trading day today. Let's go to a daily chart of the S&P 500, and I think what's happened from late October to now mid-December has been a story of strength, right? There have been very few days, to be honest with you, that the S&P, that the NASDAQ have not closed higher. Certainly very few days over the last 6 weeks that we've not seen a positive week emerge through the course of trading. The end of November, sort of first couple days in December, we'd stabilized off a little bit, just below that 4,600 level. But again, this week, sort of resuming that uptrend. The S&P 500, the NASDAQ 100, now both making a new high for the year here in the month of December. Equal weighted versions of some of those indexes just barely starting to break out. We'll look at the QQQE, which is an equal weighted NASDAQ 100 ETF. Actually, just made a new high this week. Others, not so much, right? Small caps still obviously well below highs earlier this year. The equal-weighted S&P, the RSP ETF, still below there. But overall, at the end of the day, this is a market going higher. And that is not a judgment call. That's a reality check, just looking at the breakouts that are occurring. Look at the stocks making new highs versus new lows. There are very few new 52-week lows and a bunch of new 52-week highs, and that list has been growing. So overall, the conditions certainly seem particularly strength. And my contrarian hat has to point out, we didn't mention this until today, but there's been a new 4-time leveraged ETN that was just released last week. The ticker is XXXX. So I don't know, when I'm seeing a quad leveraged ETF released, my contrarian hat starts to flash red saying, I don't know if this is the time you want to be chasing it. But, so do your due diligence on something like this. This is a new ETN. It's not an ETF, it's an ETN. It's an exchange-traded note. I would be looking at counterparty risk, all sorts of liquidity risk and things like that. So certainly not suggesting you take a shot at an ETN like this. But worth noting, that is a new super leveraged opportunity that has now been unveiled. That's the first, as far as I know, first quad leveraged ETN that I've seen come out there, certainly for the S&P 500. Looking at the VIX, right? The VIX, as I mentioned, at a significant low. It briefly dipped below 12 earlier today, finished today just slightly above there. But overall, this is one of the lowest readings on the VIX we've had, certainly in the last couple of years. Let's go back even further. Let's go like 6-7 years or something like that. My guess would be, so back to late 2019, it looks like, was the last time we were down at this level. Maybe the beginning of 2020. We can use the inspect tool, kind of see where we're at right now, and then look to the left, and you can see, sort of January of 2020 looks like the last time we've gotten, down to these levels. And if you remember back in 2019, which is, is pre-COVID, so that's like 20 years ago, I think, mentally for many of us. But if you think back to 2019, this was very low volatility environment, right? And really 2017 was even lower. This is where you had the VIX actually getting down into single digits barely. I mean, it was a very different environment than what we've sort of become used to in 2020, 21, and 2022. Now we're kind of getting back to arguably more of a normal level for the VIX in a sustained uptrend. And I think that is one of those interesting ways of describing the market conditions here in December of 2023 is the lowest VIX that we've seen since before COVID, right? And certainly the peak just before COVID here in early 2020. So, are we back in that sort of low volatility, consistent uptrend environment? I mean, for a week like this, and certainly in the last month, it certainly felt that way for sure. Now, let's look at a couple other charts here, and then we'll look at some individual names. I want to point out the new Dow theory, which just looks simply at the S&P 500 and the NASDAQ composite. As I'm sure you probably have observed by now, both of these two indexes, some key U.S. benchmarks, arguably very growth-oriented and heavily weighted to the growth sectors as opposed to value sectors, but still the most widely followed benchmarks, both making a new high for the year here in December. So the seasonal tendencies in the second half of the year, and arguably for most of 2023, have been pretty spot on. And if you look at the Stock Traders Almanac, it tells you probably have a major low in October, probably have a really strong November and December here in a pre-election year. It's pretty much what we've experienced so far. Now, again, there's a lot of game left, and there's a couple weeks left in the year. The Fed meeting tomorrow, I mean, don't underappreciate the ability of the Fed and certainly Powell's press conference. I think I wouldn't anticipate any change in rates. I think that's a foregone conclusion, but a lot of investors will be hanging on Powell's comments and questions and answers after the announcement, just to see what sort of trajectory we might expect, sort of that dot plot about where Fed governors are anticipating interest rate policy to go in the year to come. So there could certainly be a downside push if there is any sort of implication that this expectation of lowering rates earlier on in 2024, if that's changing at all. But overall, the market's sort of very Goldilocks feel to sort of interpreting that the Fed's actions have worked. Inflation's still coming down, and not down to the bogey just yet, but getting closer and closer. So overall, I think that's an important reality to accept, that both of those benchmarks are breaking out. Now, the equal-weighted versions of some of these, not quite breaking out yet. The RSP is an equal-weighted S&P 500 ETF. It's getting very, very close, but it's actually lagging behind. The advanced decline lines on the major averages, mostly lagging behind, of course, as well. Certainly the New York Stock Exchange lagging behind, but the equal-weighted NASDAQ 100, which granted are still pretty big, growth stocks, but this had been lagging behind the QQQ. It today is actually breaking out to a new swing high. So I think the bull case going into the beginning of next year involves these sorts of charts continuing to push higher, breadth data continuing to improve, advanced decline lines pushing and mirroring the breakouts that we're seeing in the major averages, and equal-weighted versions of those following suit as well. Now, the other side of this sort of argument is something we've highlighted, right? So many stocks are overbought, and when those things happen, it doesn't mean that the long-term trend is in jeopardy, but it does suggest that a market may have run too hard, too long, too fast, or too high, too fast. I'm looking at the percent of stocks above their 50-day moving average. We're holding steady around 85% here in the month of December. If you look back, I've highlighted previous times when this indicator has gotten above that 85% level. It's not great, and it usually does not mean that the top has happened immediately, but it does suggest we're at the later stages of that. And if you look, it's often an early warning telling you that we're seeing a big upside push. Probably you'll get a bit of a pullback, and sometimes it's been short-term pullbacks, like you saw in December of last year, which was a brief pullback before resuming the uptrend in January. December this year, of course, starting out a lot stronger than last December of 2022, that is. But overall, the fact that we're getting up to these extreme breadth readings suggests to me that, again, we've had a bit of a pullback with some of the Magnificent Seven stocks, but these breadth readings still are very overheated relative to historical norms, and suggests even if we do see further upside in the first quarter of next year, I wouldn't be surprised if we have more of a pullback than what we've seen so far. Now, there are other indicators to watch as well. One of my favorites in terms of a short-term breadth rotation would be the McClellan Oscillator. This is literally taking the advanced decline data and using some smoothing out to turn it into an oscillator. So think of this as sort of an RSI for market breadth, is I guess a good way to think of it. When the indicator is above zero, the conditions are bullish. When it's below zero, the conditions are bearish. These are not big long-term signals. These are more short-term tactical signals. So I've highlighted in green when the indicator is above zero. I've highlighted in red when the indicator is below zero. And if you look, the big gains have happened when the oscillator is above zero. The big drops have occurred when the oscillator is below zero. And when we've had a good run, looking for that break back below that zero line has often indicated, really early on in any sort of rotation lower, that we're starting to see some inherent weakness. So as we show strength, as I think it's safe to follow stocks higher, I'm certainly looking at a chart like this to watch for when, not if, but when we break back below that zero line. And that might tell me that a pullback that I think is due based on the overbought conditions is actually much more likely or much more imminent. For now, it's sort of steady eddy up and to the right. Funny thing happened earlier today. I mentioned the webcast I was doing, and I looked at this particular table, which I'll show you right now. I was looking at year-to-date performance in the S&P 500, and if you bring up a list, so here's the S&P 500 members, and I have them in a chart list just because I'm often looking at this list of stocks. If you look here, we have a performance function, and ACP, by the way, has a similar table just below the chart on the bottom. You have a performance table that you can bring up. if you sort this list of stocks by year-to-date performance, it is a really cool way to look at different time frames, to think about what's working and what's not after major turning points over different time periods, help you really understand the stocks, the individual names, the themes, the groups that are comprising these indexes and what's happening to them. Sort the S&P 500 by year-to-date performance and stop me when something surprises you. NVIDIA, no surprise for me, strong name, strong group, absolutely. Meta Platforms, strong sector. XLC, of course, one of the top performing sectors behind technology. Magnificent 7 stocks. Now, here's where the record player scratches a bit. Royal Caribbean, Carnival Cruise Lines. Again, these have had pretty good runs, and if you've missed it in November and December, of course, a big part of those gains have happened at the end of that period, but RCL, actually an incredibly strong chart year to date. It's interesting, it's fascinating to me how well some of these charts have done, and I guess I'm still thinking of sort of this August, September, October, high interest rates, travel, tourism, struggling kind of theme. And I'm forgetting the fact that these have now completely round-tripped to their summer highs and broken out. Norwegian, Royal Caribbean, Carnival, all sort of in a similar type of pattern. And it's not just a nice resumption of the uptrend. Literally, from the starting point at the end of December, these have been some of the top-performing names in the S&P 500. I thought that was a real interesting point. It really shows the strength. I mean, a lot of that is, I think, magnified by the last 6 weeks, which shows you what a rotation this has been, and seeing investors rotate to some of these names that had been underperforming in the third quarter. Just a couple other names to round out our discussion. Solar stocks continuing to show weakness. A lot of these charts like FSLR, I mean, they've had opportunities to recover. You think of a Royal Caribbean downtrend into late October and then breaking out, right? Breaking above moving average resistance, breaking to a new swing high. First Solar, kind of the opposite, right? Attempting to break above 160, but failing to do so. SolarEdge is another one of the solar names, obviously in a much more negative trend, continuing to go higher. Enphase Energy in this same group. A lot of these stocks have been in well-established downtrends, but this week continuing to rotate back to the downside while other things are actually doing quite well. Just to wrap up the market update, some earnings to highlight very quickly. Oracle gapping lower today, down over 12%. Gaps are a really interesting way to interpret what happens when a company beats earnings or misses earnings. What's interesting to me on the chart of Oracle is we have gap down, obviously on an earnings miss. We've gapped down to the October low, which also happens to be right around a big round number of 100. I would not be surprised on a chart like this after a gap lower to find support at a big round number at previous lows. Now, I think the weight of the evidence, not particularly strong. I would like to see a sign of accumulation. I'd like to show that buyers are actually coming in and buying in around 100. But overall, when you look at the chart of Oracle, JCI, Johnson Controls, Paramount, these are all stocks that are gapping lower. And worth noting where they're at when they gap. Look to the left and see what sort of levels might come into play yet again. That's our market recap for today. I want to bring on today's guest, Joe Rabil, here in a moment. Before I do so, a couple quick announcements. First off, we love hearing from you. Appreciate your interacting with us on the live Q&A on Monday's show. Had a lot of fun, and all of the questions we did not get to, which were a couple, we put in our Final Bar mailbag. You can always send questions to us via email. TheFinalBar@StockCharts.com is the best way to get your questions to us. Anything you're running into as you're analyzing the markets, as you're trying to make trades and outperform, as you're using the technical analysis toolkit. On X, just tag us in a comment at FinalBarSCTV. And of course, on our YouTube channel, you can also drop a comment below the video that you're watching. Just to let you know about our programming between now and year end, we are going to take a break here at year end in the last couple weeks to celebrate the holidays, do some strategic planning, and set ourselves up for success in January. Just to let you know about some special things coming up, though. This Friday, we'll be airing a special interview I'll be doing with Larry Williams. We'll be talking with him about his interpretation of market conditions in 2023, his market outlook for 2024. So don't miss Friday's episode. That will not be live, but we will air it on Friday on our YouTube channel. Next week, no more live shows until the beginning of next year. We have a lot of really cool special episodes we're working up for you. We're going to be talking about the top 5 charts of 2023, what we learned from them. We'll be doing an all mailbag episode or two, sharing some of the questions we've received recently and how they help, I hope, help you make sense of the StockCharts platform and analyzing the markets. And also, we will be doing the Final Bar's 2024 market outlook. I have 3 fantastic experts lined up. We'll do a virtual discussion over Zoom, and we'll share with you their outlooks for the next 12 months of trading. So a lot of great programming here on our YouTube channel. Don't forget to subscribe to our channel and like this video while you're here, and then you won't miss those special episodes through year end. I want to welcome on today's guest, Joe Rabil. Joe's been a frequent guest here on StockCharts TV. On my show, The Final Bar, he also hosts his own show, Stock Talk with Joe Rabil. He's the president of Rabil Stock Research, coming to us from Fairfax, Virginia. Joe, happy holidays. How are you?
Yeah, you too, Dave. I'm doing great.
It's
Glad to be
good to
on.
see you. It's good to see you. Last time we spoke was late September. The market's in a very different phase. I feel like during that conversation, we're talking about deterioration. We're talking about downside targets. Obviously, a lot has changed now in the last 6 weeks. Nice rally phase for a lot of things that we're covering. When you look back here recently, when you think about now going into the beginning of next year, where's your head out in terms of the current market conditions?
Yeah, I mean, I'm a momentum guy, so I have to go with what I'm seeing and not with what I believe sometimes. So the momentum is really good. If you look at the average stock and the movement that they're making, it's being confirmed by my indicators, both MACD and ADX and RSI. But the other side of the coin is something you were touching on earlier in your show, and that's the volatility is low. Volatility, I've studied this a lot. I don't use the VIX. I use the ATR, average true range, actually. But if the market's getting ready to get hit, typically, not always, but typically there will be an increase in volatility prior to the market going down. It doesn't happen after the fact most of the time. And so right now we're hitting new lows in volatility, and both my daily and weekly, when I look at it, the trends are pretty solid and there's low volatility. So I think we could pull back at any time, literally. I don't think we're going to get a big pullback until the year's out now, but we're overbought enough to get a pullback, but I don't know that we're going to see an end of the trend right now based on the momentum. But I do want to make one point. The IWM is how I look at like a broadening effect, and it's shown some signs of improvement over the last few weeks in terms on a relative basis to the S&P, but not enough. It's going to need to get a lot stronger if this is going to continue into the new year and have some legs that, and I don't know that that's going to play out that way. So we might need to be on our toes as we move into the new year, but I think for now, the momentum is strong enough to keep us going into the first quarter.
Talking with you, Joe, you often bring some great long-term charts, and we're going to get to your charts here in a minute. You have some weekly and monthly charts that we can think about, but it reminds me when people talk about the strength in small caps, that's recent strength, undeniable, right? Nice rally, bounce off of the lows, but the longer-term chart of the Russell 2000, not particularly strong. I mean, I don't think that's anything but, sideways at best, I think, until proven otherwise. So very, very, very well said there in terms of small caps and looking at a broader advance. Let's get to your charts looking at the consumer space. We're going to dig into the consumer discretionary sector. Set the table for us. When you're looking at consumer, what's your overall impression of the space here?
So when I do this, I'm not a top-down guy. So what I do, I actually, when I found out I was going to be on the show for sure or whatever yesterday, I had been going through every single consumer discretionary stock. So I went through, every single one of them over the last 48 hours. So that's kind of how I get a feel for what's going on. And I do look at the XLY for sure, but I like to get a feel for, is there improvement in the worst performing stocks? I know we've got stocks like Lulu that are blowing it out to the upside, but I kind of want to see the ones that aren't really trading that well. And there's definite improvement. There's a lot more stocks hitting new monthly highs. There's a lot more stocks, turning back up above key moving averages that I use. So, I think things are improving overall. And I'm going to show you a couple different examples of stocks that I think are in different positions, but all have the potential, I think, to play pretty well over the next, say, 3 to 6 months.
Let's go through some of the charts. So we're going to start with SIG, and just so everyone's clear before you start, Joe, in the upper left we have a weekly chart of the S&P, with the stock, with the relative performance and RSI with some time periods. Then we have the daily chart in the upper right, the monthly chart in the lower left, the weekly chart in the lower right. So you, as always, are giving a mini masterclass in how to set up your ACP better than I do with the different time frames. But just so people know, we're going to be referring to each of these charts, I think, during the discussion. We're starting with SIG. What's the take on Signet here?
Yeah, so I really like to start on that bottom left, the monthly chart, and we can see that we had that big move into the end of 2021, and then it pulled back, and it's really been wedging in. So we had a big move to the upside, and then we pulled back in 22, And then we've gone sideways. And now we're recovering and holding the 18-month line, which is that purple line. And if you notice, as that's taking place, it wasn't this month, but last month, look at what the MACD is doing. It's cupping around above the zero line and turning back to the upside. And we have the green DI, which is the plus DI there, is showing the buyers are still in command. Even though we went through a pretty good correction period over the last few years, the red or the negative DI or the sellers, however you want to look at it, couldn't ever really overtake this. So we've got a lot of good going on this bigger picture pattern. And then when you go to the weekly chart, it's just a flat out breakout of a base. And it was a low ADX condition. And we get this strong move coming out of a low ADX condition. Typically, that means expect more upside. Now, we're short-term overbought. You can easily see that on the daily. So we do want to look for some kind of a better entry. I think even something closer to 90 would make me feel a little bit better. But we've got a breakout in the relative strength. We've got good momentum conditions across the board. I mean, this is one that is, I think, has real potential. If it can pull back the right way, I think it would be a pretty good opportunity.
It's a great way of showing how that on the daily chart, you see that, the significance, the momentum that's happened in the short term. And arguably, you're right, overbought here. But the weekly chart really puts that into perspective, really a broader base that we're kind of getting out of. I love that multiple time frame analysis there. Tesla's number 2, which just narrowly missed the top 10 year-to-date performers so far for the S&P, but right up in there. Talk us through this name.
Okay, so this is one of those. So I wanted to give a couple of different types of patterns. I didn't want them all to be like signet breakouts. So this is one that I'm watching really closely because if we look at what's going on the monthly chart, we're kind of trying to hold that 18-month, which is now trying to flatten out underneath. You see how it was down and now it's flattening out?
Yeah.
But also look at what the MACD is doing. It's cupping around right at the zero line. So we've got this kind of pattern that I like to look for where we've gone through a massive correction in MACD back down to zero. And then we're holding that area and starting to cup around. And then notice the ADX is low during the decline. So we've gone through this big decline, but we're not getting sellers to show any strength. So this is the kind of combination I'm looking for. Now, I do think it's a little on the early side. If we go to the weekly, we've almost got the exact same pattern with MACD. And look at how the price is climbing back above the 18-week. And the MACD is trying to turn at the zero line. So we've got, I love it when 2 time frames simultaneously are showing this type of pattern where if it can click in, I'm not saying it's going to, it might not, but if it clicks in, we get 2 different types of players, right? Long-term players and intermediate-term players both kicking in at the same time. It tends to have a better effect on the up move. So I'm watching something like that pretty close.
It's interesting with Tesla. I mean, one of the issues I've had with Tesla on the daily chart here, if you draw a trend line off of the tops, I mean, we sort of just, we keep making lower highs and lower lows. How important is it with Signet? You've already had that breakout. How important is that sort of breakout pattern on a chart like this in your opinion?
Oh, it's everything. I mean, the thing is that there's a huge difference between a setup and a trigger, right? We don't have any trigger. If we're setting up, we're not even, I don't even know if I could call it a setup. It's almost like a little premature on that end, but it's getting really close. So I thought it was worth mentioning because it's such a big name and everybody asked me about it nonstop.
Right.
But if we can break that downtrend, we're going to be clearly back above the 18-week, clearly back above the 18-month. We're going to get the MACD on the weekly to turn up from the zero line. I mean, there's going to be there's going to be a shift here that I think is definitely worth keeping an eye on.
Something to watch for sure. All right, we're staying here in the same sector. Polo Ralph Lauren, RL.
So if you look at this and you go back and look at Signet, I mean, you kind of have this long sideways pattern. The difference here is it hasn't broken out yet, but I like what's going on. And I'll skip the weekly for a second because go to the daily, look at the momentum, look at this ADX reading, look at what the MACD is doing, the strength of this move. So yes, is it a little overbought right now? Absolutely. But I want overbought in this situation because it hasn't broken out. I want strength to the upside. I want an out of band move to the upside to show real upside potential. Now we need some kind of a digestion phase or a pause or pullback. And I think if you can do that over the course of the next few weeks, maybe even hold 130 in that process, this thing's going to look dynamite, especially on the weekly chart. Because the weekly is just trying to break out of this big inverted head and shoulders pattern.
Right.
And if we can get through that area, I just don't like buying overbought breakouts, you know? So I'd
Yeah.
like it to pause or pull back first. And if it can do that and then break out, I think this would look pretty nice.
And if you use the, I mean, if you use the kind of traditional measuring technique on something like this, I mean, a breakout of this sort of base, tons of upside potential, right? Given
Yeah.
given the size of that base. All right, the last
Yeah.
one here to wrap up, Airbnb. This is a name obviously that had a nice bounce here in December. What's your take now?
Now this one's even earlier than something like Tesla in a way, but look at how this bounced off its 18-month. Now the 18-month hasn't been around for very long, but look at how it found support at this line. I mean, I look at this stuff all the time, and sometimes I get amazed, like, you know, why is this line so important? But it really is an important line. So I'm always watching. So the fact that it did that is a good sign. If we look at what it's going on the weekly chart, we have the same MACD pattern that I've been talking about, the zero line reversal pattern, and we've crossed over the signal line. So lots of nice improvement. And we've already seen the last two moves to the upside. We've already seen ADX show some pretty good strength. So it's not like we're turning around a bearish pattern. We need to reemerge again one more time. And again, it's probably not quite there, but it's one I would be watching as we move into the end of the year, early next year.
Really good charts, and again, I appreciate so much how you're showing us the ACP setup with these multiple time frames. I mean, just brilliantly done. Just to wrap up, we only have about a minute left, but I'd love to just take a step back with you. I mean, we're doing some year-end programming here in the next couple weeks, kind of helping our viewers try to make sense of what happened in 2023. When you look back at the last 12 months, what did you learn this year? Any big takeaways from your own experience?
Yeah, you know, one of the things that I really sometimes, so I'm sort of a perfectionist in a way, and it has hurt me as a trader sometimes. But in this case, I really kind of felt like I saw everything right coming into the low, this last low, this pullback. Because again, if you look at the S&P with my charts, it pulled right into right into the 18-month line.
Right.
And so at that point, I was looking for a volume explosion. I was looking for sentiment to get really bearish. And I was like, you know, I thought everything would fall into place and I'd get the perfect entry right off the low. Now that has happened sometimes, but you got to realize that it's not going to happen a lot. And I kind of realized it after a week, after it turned up for a week and the strength behind it. But, you know, sometimes a really good entry is just getting oversold, coming into major support, right? And having the conditions in place underneath underlying conditions on the bigger trends to just go ahead and take advantage of that. And you don't necessarily have to have confirmation every time in those situations, especially when you're looking at it from a general sense, from market sense.
Well,
So,
anytime you think this game is easy, Joe, you can always look back and think about examples like that where it's tougher than you think. Listen, it's great to see you. Thanks so much for being a part of the show this year. We will look forward to continuing this momentum in 2024. And between now and then, have a great holiday. Okay, Joe?
you too. Thanks for having me on there, Dave.
That's Joe Rabil. Joe's the president of Rabil Stock Research, coming to us from Fairfax, Virginia. I love his comment at the end. I asked him ahead of time, look, are you okay if I ask this question about just sort of takeaways from the year? And he very graciously answered. I love that comment. I mean, someone like Joe, who's had a very successful career, works with top money managers, has an incredibly good, consistent process, doesn't always have it right. And I think that's a reality, right? We're imperfect. It's tough, but having the courage to look back at some of your experiences, learn from them, and think about tough calls during the year, tough periods, even bad trades, and think about what you learned from them, what you can do differently going forward. That's the way you can grow as an investor over time. Great charts and some great perspective there, as always, from Joe Rabil of Rabil Stock Research. We've got to wrap the show, folks, and go to the 3 and 3, 3 charts in 3 minutes to tell the story of this market environment. Here's chart number 1. Looking at cruise lines again, I don't want to make that big of a deal, but I can't help it. I was sorting the list, over the last couple of days, just sort of preparing for some interviews this week, and I was thinking, wow, cruise lines really at the top of the list. I mean, I'm thinking Magnificent Seven names, I'm thinking growth stocks. Cruise lines were not there for me. Now, again, a big part of that has come at the end, but even at the October low, Royal Caribbean was still up quite a bit on the benchmark. So what we're looking at here is Royal Caribbean in black. Year-to-date return about 143%. In purple, we have the NASDAQ 100 up about 50%. In orange, we have the cruise ETF, which is sort of a travel tourism ETF, travel and leisure ETF, up about 31%. Here's the S&P's meager plus 23% here year to date. So again, a big rally, in the last 6 weeks, but still at the October low, Royal Caribbean still far outpacing some of these other areas of the market. I think it's a great reminder. In Connie Brown, one of her books, she talked about, just the challenge of looking at a lot of charts. And what happens is the way that charts work is we stretch out the data to fit the visual space. That's just kind of best practices for charting. What that means is relative movements are actually very hard to compare. So these comparison charts, the perf charts on stock charts, here I'm just using our regular Sharp Charts engine, but using the performance tool to analyze performance over the time. Don't underplay the value of looking at performance over different time periods, using the table, using these charts to really understand the relative movements, the relative returns that you're working with. Chart number 2 in our market recap, I was talking about the overbought conditions. I agree with Joe's take. I mean, I can't deny the strength in stocks. I think if you're fighting this trend, you're ignoring some clear signs of a robust move higher. But there are plenty of things that concern me about potential likelihood of further upside going into the beginning of next year, or maybe a sustained move without some sort of pullback. And charts like the McClellan Oscillator just trying to tell you when conditions might change, I think are really helpful. When you think you have a good sense of where things are at, when you think you have a good thesis and you feel like the positions are working, think about what charts would tell you that the conditions are changing. I love Joe's comment about looking at the ATR. I'm going to dig into that a little bit. I think the VIX, the MOVE index, ways of measuring volatility can be helpful. For me, just looking at these breadth indicators, the McClellan Oscillator, stocks above their 50-day, and looking for when there's a change, I think can be really helpful for you to catch a move early on. Finally, just a reminder that a sector does not mean all the stocks are following that particular sector's returns. We tend to a lot of times think a little more simply about sector returns and how all stocks are kind of doing the same thing. It's not the case, particularly in healthcare, which is actually a fairly diverse sector. This week, you have MOH, Molina Healthcare, making a new 52-week high. You have McKesson, a pharmaceutical name, not in making a new high, but certainly in a consistent uptrend of higher highs and higher lows. And here's the poor XLV, which has basically been range-bound for quite some time, kind of in that range. So even within a sector that has not been particularly strong on a relative basis, there are individual stocks that are tending to work. And this is a good reminder to use the scanning engine to focus on names that are actionable, right? Names that are breaking out, that are breaking down, that are seeing buy and sell signals. Make sure you understand the individual stocks and where those opportunities might be. Folks, that's a wrap for the show. Thank you so much for joining us every weekday after the close for the final bar. A special thank you to Joe Rabil of Rabil Stock Research joining us from Virginia. Don't forget to like this video and subscribe to our channel while you're here. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.